All right, awesome. Guys and girls, thank you so much for tuning in. This is week number 4 of what I like to call Mind Over Markets. And today we're going to be talking about attachment. Really, really important topic today. I think this one is definitely going to open some eyes as to why we experience a lot of the stuff that we tend to experience. And again, I will give that some more context as we kick off. And again, hopefully, I'm looking forward to giving you guys some context as to why we do the things that we do on a day-to-day basis, and then obviously what you can do to overcome those to help improve your performance in the markets. As we've obviously been discussing just before the recording is kicked off, I think a lot of what we cover in these sessions, yes, obviously it's tailored to helping you to become a better trader, but I am a firm believer of this idea of how you do something is how you do everything. In the process of becoming a better trader, you have to become more self-aware. You have to be accountable. You have to be responsible. You have to be able to develop an ability to understand your belief system, to know why you're thinking, feeling, and acting the way that you do on a day-to-day basis. And understanding all of those elements can help you in many areas of life. It's not just going to be trading. It's going to be your relationships. It's going to be your businesses. It's going to be your jobs. It can be many different areas. So I'm glad to hear that you guys are enjoying the experience so far. I'm glad to hear, at least from what everyone's been sharing at the moment, that they're finding these sessions helpful. We're after today, we're officially halfway through, which is cool. I'm hoping you guys are starting to see some of the positive impact, whether that's in your results, whether that's in your mentality. And again, the results will catch up with time. And again, we're going to start getting a little bit more active week by week now, giving you guys some more weekly challenges. Um, and yeah, just getting you guys to develop an ability to start applying these into our day to day, because essentially a lot of what these starting few sessions are about are a little bit of theory, and they're getting you to develop a level of awareness that's going to help you. And by the end of the boot camp, I want to see every single one of you guys that are taking part in this psychology element starting to apply this and actually starting to see some impact and some results off of the back of what we've seen. So just before we kick off, I know in our last session we talked a lot about expectations. I'm hoping everybody's had a chance to watch over that session before today. Again, they're kind of everything throughout the bootcamp can be watched in kind of any order, but I've planned them in a way that kind of builds on top of each other one by one, so that we have some kind of structure and framework to what we're doing. How did everyone find last week's session? Just as we kick off, how did everyone get on with last week's session? Did you guys manage to find the time to do the reflection exercises, reflecting on the last time you were on tilt, maybe starting to apply the thought process behind what we're doing? Have you started to ask yourself, what am I expecting going into my future trades? Because I think this is a very, very big one. I've always liked the idea, or it's made a lot of sense to me, that many of the emotions that are introduced into trading are basically a direct result of having the wrong expectations. Cornell says, eye-opening for sure. It's good to hear. Always good to hear. Okay, cool. We'll dive into today's session. And as always, towards the end of the session, we'll have a little bit of open Q&A. So if you guys do have any questions based on the structure of today, or maybe you have other questions related to psychology, which you feel like I haven't already yet answered. And again, we have another 4 weeks worth of content to cover. But if there are any questions that you want to throw my way, we'll have some open conversation towards the end. In the meantime, I want to start today's session by throwing out a little bit of a question. I like to try and keep these as interactive as possible. I want to try and keep you guys as engaged as possible. And so for me, it makes most sense to start this session with a question. And that question is, I think a lot of the reason why traders struggle to find the success that they're looking for is they have a certain level of attachment to the markets, which prevents them from making the decisions that they need in order to be most profitable. So my question for you guys, and again, this is opening things out. I've covered a couple of things in today's topic, which I think are probably the most common but I'm open to hearing from your guys' perspective. What do you guys think that we are attached to most, which holds us back in our trading? What do you think that we are attached to most, which holds us back in our trading? Hiraj says feelings. I agree, but I haven't labeled it as feelings, right? I don't disagree with what you're saying, but I haven't labeled it as feelings. Demetrius says, personally, the dopamine I get after I win. Again, very similar to what Haraj said. Again, but I just haven't labeled it as, I guess, the feeling or the dopamine. Eclipse says money. That's definitely one of them. I think that's definitely a big one. We're going to spend a lot of time talking about that today. I think you guys are all basically along the right lines, right? Let me pull up my whiteboard and I'm going to share exactly what I'm referring to here. Give me a second. Okay, so I'm hoping everyone can see the whiteboard nice and clear. I'm hoping everyone can still see and hear me all good. Any issues, please let me know in the chat. I believe that we as humans come to the markets with an attachment to two specific things which tend to hold us back in terms of finding success in the markets. And these two things are firstly money, which I think Eclipse mentioned in the chat. And the second one is the attachment to being right. And I've said this was essentially kind of close to what we were mentioning here, which was, I think Harach mentioned feelings. Demetrius mentioned the dopamine after getting a win. And again, I'm going to expand on both of these things as to why I think these are the correct ways to probably label them. Again, I'm very, very fortunate in that I get to speak with hundreds of traders every single month. I work in a variety of different communities. Many of you know I partner up with the prop firm Funded Next. As a collection of a lot of the work I do, I speak to a lot of traders every month. And most traders that I speak to when it comes to the topic of attachment, specifically, it roots back to one of two things. And I think addressing both of these problems, the attachment to money and the attachment to being right, will help you to fix the vast majority of the level of attachment that you have, right? Because attachment in and of itself is normal. And I'm going to explain again a little bit of that as we get into this. But attachment in and of itself is normal for various different reasons. And what we need to learn to be able to do is detach, right? We need to learn to detach from money and we need to learn to detach from the need to actually be right. Eclipse says, being right is 100%. I found myself triggered many times in paper trading just because I was wrong. And again, this is spot on. We're actually going to talk about that exact example, I think, towards the end of today's session. The reason that I'd like to separate both of these things is a lot of people deal with usually one or the other. Sometimes it's a little bit of both. Usually it's one or the other. And I think the problem that most people have is they don't know which one they're suffering from. So I mentioned right from the very beginning of hosting these sessions for you guys that a lot of what we're doing here is essentially raising your level of awareness. Raising your awareness as to what are the common psychological traps that most people suffer with, but fail to actually recognize. And I think as we go through each of these today, you guys are going to be able to recognize these traits and characteristics in yourself. And obviously, once we've unpacked a little bit of the psychology behind them, we're going to go through specifically what you can do to start improving on these areas. But I want to mention right from the very get-go that you want to be applying the fixes relative to the problem that you're experiencing. So for example, a lot of what people get wrong here is, let's say, for example, they have an attachment to money, but they're trying to apply fixes which apply to fixing the attachment of being right. If you're applying the wrong fix for the wrong problem, essentially, you're never really going to get the outcome that you want. And a lot of that issue starts from right at the very beginning because you don't actually know what the problem is. So we're going to try and fix both of these issues today by giving you a little bit of clarity as to what we're experiencing. Okay. So firstly, let's talk a little bit about the attachment to money. Big one in, I guess, today's society is what a lot of people seem to struggle with. And I think a lot of that is largely because of the low barrier to entry that trading now brings. Back in the day, if you rewind 10, 20, 30 years, the technology wasn't available, the opportunities weren't available that we have in today's times, where you could essentially open an account with a very small amount of money and have the option or have the ability to almost make life-changing amounts of money or enough to sustain a side hustle or a full-time income, right? Nowadays, you could take 50, few $100 even, and pull them into a prop firm, go through the challenges, actually make it through the challenge stage, and actually earn enough from that to essentially sustain some kind of living. If it's not just some extra pocket money, right? Depending on, I guess, where you are in the world and what that money means to you. Now, when it comes to talking about money, one thing is very, very important to bring up from the very beginning, and it's that money is very, very important to each and every one of us, right? And I think most of us know this, whether it's consciously, subconsciously, whatever it may be. But most of us know this on a day-to-day basis because essentially we need money to survive, right? Money is money is seen as a means to security. Put these in a line. Security, power, freedom, and often for a lot of people, self-worth, right? The problem is a lot of people don't think about this or don't acknowledge this attachment to money when we come into trading. Again, remember what we are doing in the markets. We are risking money in order to make a living. If you have no capital, if you have no money to risk, your ability to make money as a trader, even if you're the best trader in the world, is absolutely zero. And so it's important to be able to recognize that we as human beings, if our entire ability to make money is based on risking money, it's important we understand what money means to us. When you guys think about money, and this is going to be different for each and every one of you, but when you guys think about money, does it relate to security? Does it relate to a certain level of power that you would like to possess? Do you think about freedom? Is it directly linked to your level of self-worth? Because all of these things are applicable. None of them are right or wrong, but you have to understand what money means to you. And so the first thing I want you guys to do from today is I want you to think about all these elements, right? When I talk about what money means to you, which one of these comes to mind? It could be all of them. It could be one of them. It may be none of them. But I want you to start actively thinking about this, right? What does money actually mean to you? Because depending on where you are, financially in your life, it could mean a variety of different things. The person that already may have an abundance of money, it may not mean freedom to them directly because this is something that they already have a lot of. Maybe it just means it's a means of security. Maybe it's a means of power. But for the person that doesn't have a lot of money right now and they're looking to still be on that path of building their own financial security and wealth, maybe security, power, level of self-worth, maybe it dictates a lot of these things. And the important thing here is, again, not saying that any of them are good or bad, right or wrong. It's just becoming clearer on why money is important to you. It is absolutely normal to be attached to money because it plays such a big role in everything that we do, right? In today's day and age, money has a symbolic value, right? We praise people online that seem to have a lot of money. We like it when we see people doing well. We like it when we see people buy fast cars, fancy watches, going on private jets, flying first class, business class, whatever it is, right? Money tends to have this symbolic value, which is often tied with a certain level of respect. And so when we come to the markets trying to chase essentially more of this and trying to make more money, we have to understand that all of this is on the line. Every time we are making a decision to risk a certain amount of money, all of this idea of what money means to us and what it symbolizes in our life, this is what's at stake. So this is why losing money is never really easy. It's never something that just comes naturally to each and every one of us, and some people are just okay with it, right? Some people are okay maybe losing a lot, more money than others. For some people, losing $50 is the same as losing $5,000 to somebody else, but everyone has a limit. Everyone has a certain attachment to money at a certain point, and it's important to understand where yours particularly comes from, right? Now, as a natural result of everything that we attach to this idea of making money, we tend to experience one specific thing as human beings, right? We tend to experience loss aversion. I talked about this in one of our previous sessions. I believe it was maybe session 1 or session 2. We talked about the idea of cognitive biases. And I should believe I mentioned this idea of loss aversion, how most human beings are opposed to the idea of wanting to lose money. And this is a lot of the reason why for most of us, we put ourselves in a position where we would rather continually move our stop loss or maybe not even use a stop loss at times rather than just accept a very small loss. For most of us, it's a lot easier to continue to push the buck later down the line. Instead of swallowing a 100, 500, $1,000 loss, we would rather see it go for 10 times more than those because it's so difficult to accept the short-term loss that we have or we may potentially experience as a result of making maybe the wrong decision, maybe the market conditions just not being on our side. But this is a big, big factor which essentially holds a lot of us back, right? So first thing to understand is that every single person that generally comes to the markets is going to have a certain level of attachment to money because it's the way we're instinctively wired. Money has a symbolic value in today's day and age, especially in the world of social media. And for each of us, we are aspiring for more security, more power, more freedom, a higher level of self-worth. And all of these things combined lead to one thing: loss aversion. We want to stay away from losses as much as humanly possible. This is, again, 70, 80, 90% of people that come to the markets, this is our natural instinct that we do not want to have to accept short-term losses. And what we're going to be discussing today is understanding this idea that actually the key to finding the level of success that you're looking for is all about learning how to change your relationship to loss aversion, right? We need to not fear taking losses. We need to fear taking big losses. And as a result of that fear, we need to be acceptive of taking small, controlled losses that we are actually comfortable with. And we're going to talk much more about that very, very shortly, right? So attachment to money is our first thing. There's a little bit about the psychology of why we deal with it and what it means to us on a day-to-day basis. On the other side of things, some of us experience this attachment to being right, okay? Now, for a lot of us, and again, I'm going to throw this one out there to you guys, where in your life did you learn that being right is a good thing? Where are we taught in other areas of life that being right is a good thing? Dimitri says everywhere, and again, inherently true, inherently true. Cornell, I think, has hit the nail on the head. I think this is where it starts for the vast majority of us, right? For the majority of us that have been to a traditional schooling system, I think the attachment to being right often starts from school, right? So our education, this is the wrong color. Our education system wires us, I can't type today, wires us to want to, Jesus Christ, to be right. Right? Our education system wires us to want to be right. And again, this is really, really important to be aware of because, again, the vast majority of us have come from a time and a place where everything in our life has been taught in a way that if we are right, we've done the right thing, right? If we are right, that's the only way we can be successful. If we are correct, then we will find success, we will find money, we will find happiness. This is what the majority of our upbringing has done to us. This often is most solidified for most people, usually in school, through the exam process, through the reward system, through how basically you are graded and assessed at school. It usually enforces this idea that we need to be right in order to be successful. There are not many other jobs and professions that follow this schooling system later in life that really teach us anything different. And so Haraj says this idea comes from when we are born. Again, don't necessarily disagree with that, but this idea is definitely comes from much earlier in life, and it is solidified throughout the many years later in life. There are not many other jobs where you could say, yeah, you know what, I have a 50% hit rate and I'm still going to be super successful, right? Imagine a surgeon, a doctor, a dentist, a lawyer that has a 50% hit rate, a 40% hit rate, a 30% hit rate. You wouldn't really consider them successful, right? If somebody was about to do surgery on you and they said, you know what, my success rate at actually completing these surgeries successfully is only 50%, it's not really going to fill you with a bunch of confidence. But as a trader, you're now coming into an industry where you're taught that in order to excel, you have to be comfortable with that. You have to be comfortable that sometimes I'm only going to have a 10, 20, 30, 40% hit rate. Sometimes at my very best, 50, 60, maybe 70% of the time, right? But you're not going to be right all the time. And again, it works instinctively against a belief system that has been ingrained to us from a very, very young age. And for the vast majority of us, that enforcement started from our schooling system. And so, for the vast majority of us, this fosters a fixed mindset, right? Where we often view the world in a very linear way. We view the world in a way that says, if I am right in a situation, then I can be successful. Then I can make money. Then I will find all the things that I'm looking to achieve will be down this path. But if I'm wrong, then I've done something wrong. I need to change. I need to do something differently. I need to reflect. I cannot succeed. I cannot make money, whatever it may be, right? That fixed mindset is very, very detrimental in trading because often there are times, and actually, one of the best things that you could come away from this boot camp and understanding is not every loss that you experience, not every setback that you experience needs to be overanalyzed. Sometimes losses are just losses. Sometimes losses are just a natural part of doing business in the markets, and there is nothing to overthink, overanalyze, tweak your system, change your approach, revamp what you're doing. Like that doesn't need to happen. Whereas, again, in many other areas of life, that level of reflection is required. And again, I'm not putting people off the idea of reflecting on their performance. What I'm saying is you need to understand that the fixed mindset that most of us come to the markets with doesn't really work for the vast majority of us, right? And in a lot of cases, this is the reason that the majority of us have bad habits. We do not want to accept the idea of being wrong in the short term. And this is what leads you to have issues in maybe even setting a stop loss. This is what leads you to struggle to sit on the sidelines and just observe the markets when you're down 1% on the week, right? We do not like being wrong. It is drilled into each of us instinctively from a very, very young age. And it makes it very, very difficult to find accepting being wrong as a trader okay, right? It's very, very difficult to accept it because none of us are really wired that way. So most of us come to the markets trying to, we prioritize being right over making money. And I know this to be true because when you see people that suffer with revenge trading or a lack of patience or not sticking to their strategy or over trading or whatever it may be, any one of the bad habits you could potentially pull out, if you extrapolate each one of those bad habits over the next 100 trades, you could show someone with data that you are choosing to take an action that essentially is prioritizing you wanting to be right in this situation over something that's actually going to make you money. And this is something that, again, you need to be aware of. This is something that you need to be acknowledging and understanding that most of us instinctively are always trying to be right, and we're not necessarily doing the right things that are going to make us money in the long run. Um, so just yes or no, before we get into some of the juicy stuff in terms of overcoming these natural things that we bring to the market, do both of these ideas make sense to everyone? Does everyone get the idea that we bring a certain level of attachment to money and being right into the markets? Okay, awesome. So the interesting stuff now, right? What can we actually do about it? We understand that we have an attachment to money. We understand that we naturally want to stay away from losing. We understand that we prioritize wanting to be right in particular situations. And now we're aware that these dynamics actually exist. What can we do to overcome them? Let's talk about a few things. Let's start with the attachment to money. This one I think is big for a lot of people. And I think especially in the realm of, let me just move this to the side. Sorry. Let's throw this up here. Let's get some more space on the screen. Especially in the realms of prop firms and how we go about managing money, how much money we utilize in this space. Overcoming this attachment is very, very important. So how do we start to detach from the idea of money? Well, first thing I'm going to say, I strongly encourage everyone to start practicing mindfulness. The problem that most traders have is that they are not aware of what is going on mentally, and that ends up causing emotions, that ends up causing actions that they are not really aligned with, and that's what ends up causing a detriment to their account. So I believe for most people, you have to practice a form of mindfulness. And that mindfulness is going to help you to be present, to recognize the patterns of thoughts and behavior, which are going to end up ultimately costing you some money. Now, the two ways I recommend doing this most, that I think are going to be most effective, is either through a practice of meditation or journaling. Has anyone ever tried meditation in the chat? Anyone practice this at the moment? Anyone ever tried it before? Is this new to you guys? Okay, cool. So I'm going to give you a very quick lowdown on, Raj says yes, but not before putting a trade on or after. Okay. What I recommend to most people is that meditation, the objective of meditation is not about finding a certain level of peace, calm, or clarity. It's not about trying to get yourself in a certain headspace before or after placing a trade. The purpose of your meditation is actually just to observe the mind, right? When you sit down every single day, focus on your breathing and just observe what your mind is doing. And what you're going to notice is for a few minutes, you're able to be completely calm. You're able to focus on your breathing in and your breathing out. And after 10 seconds, 5 seconds, 30 seconds, a minute, something like that, your mind is going to wander and you're going to start thinking about the markets. You're going to start thinking about work. You're going to start thinking about family, friends, whatever it may be. Your mind is just going to wander. At that point in time, it is your job to be able to recognize that my mind has wandered and to bring it back to the present moment. So let the thought go, let the distraction go, and bring it back to the present moment. And you focus back on your breathing and you start the process all over again. You focus on the breath in, the breath out, the breath in, the breath out, and you keep going through this cycle until your mind drifts again. And then you go through the same process, right? What you are teaching your mind to do is essentially become aware of what you are thinking in the present moment. And this is a skill, exactly like we were discussing before today's session kicked off. This is a skill that you can transfer into your trading. The moment you start recognizing that I am thinking about something that is generally not going to put me on a good path, it gives you the option to be able to do something different because now you have a little bit of time on your side. What happens to most people is they start thinking in a way which is not going to serve them well. They foster on those thoughts, whether it's consciously or subconsciously, And then it leads to a certain level of emotion which they cannot shake off. And then they have no choice but to act on that emotion because it's too late. So by practicing mindfulness, either through meditation, I'll discuss journaling in a second, it's going to help you just to recognize those patterns of thought or behavior. One of the active ways that you can do this outside of a practice of meditation is through journaling, right? Journaling your thoughts and your emotions every time you need to make a decision in the market can be very, very helpful because it's going to help you to identify all of the patterns behind your thoughts and emotions. You're going to start to recognize that every time I take a loss, I get pissed off. Every time there is some high impact red folder news coming out and there is volatility into the market, I tend to experience FOMO. The more and more you can recognize those patterns, the more aware of the problem that you are, and the more that you can be mindful in the moment to recognize that usually when this happens, something silly happens after this, and this is a pattern that I need to break free of. Hiraj says, holy shit, I already got the point. You can associate it when you are in a trade and price starts to move against your entry. You need to remain calm, right? You need to be in a calm state. 100%, right? A lot of what tends to happen is we get into a trade and we have all these good intentions going in. And the moment it doesn't start doing what we want it to do, our mind starts racing. We have a certain level of attachment to money. And again, we're going to talk a lot more about this in this section, but our mind starts racing. We're not aware of the consequences of what happens when our mind starts racing in that way. And all of those things lead you to heavy emotions and then actions that are not really going to be suitable for preserving capital in the long run. So the more and more you can train yourself to be aware of both of those things, then the better equipped you're going to be able to overcome them. So for those of you that are looking to start out with meditation, I'm hoping journaling is a practice that most of you are already exploring. You've already got some kind of journals, and adding this psychology element isn't going to be too difficult for you guys. If it is, please let me know. For those of you that are new to meditation, in the chat, I'm going to put down 3 recommended apps that I have personally used at least for a minimum of 1 year each. And I found value in each and every one of them. So for those of you watching this back on a recording, the 3 that I've mentioned, the first one is an app called Headspace. Very, very good app, especially if you're new and a beginner to meditation, teaching you this idea that it's not about controlling your mind, it's about observing your mind. It's a great place that reinforces that. And I encourage you to start with either Headspace or Calm, predominantly because they have guided meditations that talk you through the entire process. They will say things or play sounds at certain times to get you to come back to the present moment. Because one of the hardest things early into your journey of meditation is your mind will start wandering and you'll never catch it up until the end of your meditation. And that's not what you want. You want to be able to recognize it as quickly as possible, right? So Headspace, Calm, and the one that I've been using most recently is one called Insight Timer. Insight Timer is, I think, the only one out of the 3 that is free. But I only use it for unguided meditation. So no voices, no sounds, no talking, just background noise that plays that I use to focus on my breathing during that time. But if you're new to the space, Headspace or Calm, highly, highly recommend. Like I said, tried and tested for over a year each. All fantastic places to start. Okay, so I would say first and foremost, you have to be aware of the problem if you want to be able to change it. And therefore, mindfulness, and this is going to be a common theme through a lot of the fixes that I give you guys, mindfulness and a practice of mindfulness is going to be very, very important as part of your journey. One other thing that I think is very, very helpful when it comes to building a level of detachment to money is understanding your personal risk tolerance. And what I mean by that is everyone has a certain level of money they are comfortable in losing, right? So what I mean by that is if your level of comfort when it comes to losing money is, let's say, $100, we're just going to stick with round numbers, right? If your level of comfort with money is $100, and if you lose anything more than 100, you get pissed off and you get annoyed that that money is gone because it hurts internally, right? For all of the reasons we've discussed above. If that is you and you're risking $500 because you've got a prop firm challenge that allows you to trade a $50,000 account and you can risk 1% of that without it really hurting your account balance, if you are not comfortable in losing $500, even if it's play money, that ego hit that it takes, that attachment that you have to knowing what that money could mean to you, the security that it could buy you, the power that it could get you, the level of freedom, and how it's attached to your level of self-worth, all really, really hurt, right? So most people go wrong, especially when it comes to prop firms, because you can leverage a very small amount of money and get funded with a very large amount of money that your mind is not necessarily ready for. And so, what I say to most people, and this is something that I want you guys to start thinking about, if not right now, off the back of today's session, is what is your current pain threshold when it comes to money? How much are you comfortable risking per trade? And when I say comfortable, I mean how much can you comfortably lose without being pissed off in the markets? Again, for some of you, it's going to be higher. For some of you, it's going to be lower. This is going to depend on how much money you currently make, what money actually means to you at the moment. If you guys are currently making, let's say, 10K a month, then maybe losing $500 is not going to mean that much to you. For somebody that's for somebody that's making $2,000 a month, losing $500 in a single trade might hurt. That's 25% of what is your normal monthly income, and you're probably going to have a much higher level of attachment to it. So I tell people to check this before you are risking definitely your personal capital, but especially in the prop firm space, because a lot of people like the idea of the leverage they can get for their money. Again, the lower barrier to entry, as we discussed, but they don't really consider what their personal pain risk tolerance is when it comes to money. So I want you guys to think about this. How much money am I comfortable in risking to be able to still think clearly if it doesn't go my way? And again, for some of you, this could also work the other way, right? What I mean by that is, let's say you have a strategy that allows you to make 2, 3, 4 times your money, right? So you're essentially getting 1 to 3 or 1 to 4 R's in the positions that you take. If you're risking, let's say, again, we'll stick with round numbers. If you're risking $500 per trade and your strategy allows you to capture a 1 to 4 in certain positions, so that $500 could potentially make you $2,000, and $2,000 is your normal monthly income. What do you think? What kind of psychological state are you going to be in when it comes to having that much risk inside of a trade? Do you think you're going to be able to remain calm when you've got your entire month's wages being up in the air in a trade with so much uncertainty behind it? Are you going to be able to hold out for the $2,500, $3,000 target that you've got when you know that your entire month's wages is sitting and floating in that trade? And again, for most people, the answer is no, right? You're not going to be able to think clearly when you have that level of attachment to the money. And this is something that you really need to be aware of. So your personal risk tolerance can work for the downside, and this is what I find more people are attached to. But consequently, on the upside as well, it can have just a big of an impact. So I want you to understand your comfortability levels when it comes to money. And this is really, really important to be aware of, especially when it comes to finding a level of attachment. Once you understand what level of money you're comfortable with, you should be risking less than that. Most people don't like this idea because they want to risk more. They want to make more. But then when you're not comfortable with the loss, this is what's screwing up your performance in the long run. Okay. So think about that personal risk tolerance. Ask yourself what it actually means for you and how you can start to utilize it in an effective way. Okay. Next thing I want to run by you guys in a way, in an effort to start detaching from money. The problem that most people have is they only measure the outcome of their trades by how much money they've made or lost. And so what I tell most people is you should give yourself a score for how well do you stick to your process, right? So what I mean by that is you can rank yourself based on entry, you can rank yourself based on management, you can rank yourself based on exit, and you can rank yourself based on risk. All of these four areas are things that you completely have control over, and you can give yourself a score for how well you stuck to each one of these areas. For example, if you entered the trade at the exact time you were supposed to, give yourself a score from, let's say, 1 to 5. Five being the perfect entry, and 1 being the absolute worst entry, and I FOMO'd into the market because I was late and I hesitated to begin with. You could do the same with management. You could do the same with how you exited a position, and you could do the same with how well you manage risk during that process. So if you got a perfect process orientated score in each of those areas, you would have a final score of 20, right? If you can end a trade saying, I got 20 out of 20 on this trade, regardless if it was a profit or a loss, you are now framing your mind to start thinking in a way which prioritizes your process rather than the money at stake. And again, this is if you're in a position where you're finding yourself predominantly focused on how much you won or lost in a position. And that focus on money is, again, what's screwing you over in the long run. One of the most obvious things that you can do, and again, this is one of the ones that is probably not that liked by a lot of people when I give this advice. If you're finding yourself attached to money and you don't like taking losses, I often tell people reduce your position size. And when people say how much, I often start with drop it by 50%. And again, a lot of people do not like this idea because you think, well, if I'm risking half the amount that I am at the moment, then I'm not going to make half of the amount. I'm going to make half of the amount that I was hoping to make at the end of my trade. But my response to most people is the same. How would this change your mentality? Right? If you were risking half of the amount you're in now, are you going to care as much about the money at risk? And if you are, if the answer is yes, I'm still going to care as much, drop it by another 50%, right? So you're down to 25% of your normal position size. The problem is most people come into the markets looking for or just focused on how much money they want to make. And they don't actually focus on the right things in terms of creating a process that's actually going to allow them to make that money over time, right? I tell people the majority of the time that your ability to make money is directly correlated to how well you can stick to your process. If you don't like reducing your position size, you have another option, and that is raise your level of income, right? People forget that this option exists because everyone is attached to this idea of just wanting to be full-time traders. I want to make all my money from the markets because this is what, the popular thing is, this is my goal, this is my aim, whatever it may be. Raising the more money that you make outside of trading is going to make you an infinitely better trader because you care less about the outcome of the next trade. When you don't have to worry about whether the next trade wins or loses, dealing with drawdown, accepting short-term losses, these things don't have the same chokehold on you as they do as to when you're trying to be a full-time trader and this is your only way to pay your bills at the end of the month, right? You have the ability to maintain a job. You have the ability to have a business outside of trading. This is often why you see a lot of traders that actually can do well in the markets and actually make money. They have side hustles. They have other forms of income. They do YouTube. They make money through content. They have communities. They sell courses. This is not necessarily an indication that they're unprofitable traders. This is an indication that they understand that the more money I can make outside of the markets, the better a trader I'm going to be. And I like to talk about this idea very openly because this was exactly my dilemma, right? I quit my job and attempted to pursue trading way before I was ready mentally. And not making any money every single month made me an infinitely worse trader. The fact that I have a coaching business, regardless of how much or how little it will make, the fact that it will pay my bills at the end of the month gives me a very carefree state of mind when it comes to trading. And that will make me infinitely more process orientated. And that improves my odds massively of being able to be profitable in the long run. And so a lot of people don't like this idea. They shy away from this. And I tell people this isn't something that you have to be worried to talk about, right? Making money outside of trading and not being the typical full-time trader that you see online that only makes their money from the markets is not something you have to be attached to. If you want to make money from the markets, I promise you, the less that you need it, the easier it's going to be to make it over time. And that's something that I want you guys to keep in mind, right? Last but not least, when it comes to helping you to detach from money, 3 areas of risk management, right? When it comes to how much money you should be risking, this is going to be closely linked with what we talked about here, finding your personal risk tolerance. When we talk about how much money should you be risking, I always recommend that there are 3 areas you should be considering. Risk tolerance. So if you guys don't really know how much money is the right level to be risking in order to be detached from the market, I encourage you to look at 3 different areas. The first one is your level of capital. This is the most common one that most people do, which is I have a 100K prop firm challenge, I have 10K personal capital, whatever it may be, and I'm going to risk 1% of my account. You risk 1% because that's what you've been told is the right thing for you, right? But again, 1% of 10K, 1% of 50K, 1% of 100K, 1% of a million is a very, very different number. Now, I don't say that this is a bad or a pointless thing to do. I don't think thinking in percentages is inherently a bad thing. But I think, especially in the prop firm game, understanding where you're at in terms of percentages and sticking within the drawdown limits is very, very important. Outside of this, you should also be considering your strategic approach. Does your strategy do well in terms of its win rate? If you have a 70% win rate and you're comparing this to somebody that has a 30% win rate, both traders can be very, very profitable, but one of them is much more likely to have less losing trades, a smaller period of drawdown, less losing streaks than the other, right? I would say that the person that has a 70 to 80% win rate probably has a better justification to say, you know what, maybe I can risk 2%, 3%, 5%, 10% per trade, maybe, rather than the person that has a 20% win rate. That's more likely 8 times out of 10, 80 times out of 100, gonna lose their next trade. So you have to understand your data. You have to understand your strategy if you want to be able to understand what is the right amount for me. Should I be risking a lot or should I be risking a little? And is that right for my approach to the markets? And the last thing I say, as we discussed above, what's your risk tolerance? What does money actually mean to you? When you find a blend between those 3 areas, your account balance, your strategic approach, and your personal risk tolerance, that's where you're going to find the right level for you. Just because you have a 100K prop firm challenge and you risk 1%, it doesn't mean it's the right thing for you. Risking $250 per trade on a 100K account might be the right thing for you if that works best for your strategy and you know that it's going to give you the best odds if you only have a 20-30% win rate, for example, and if $250 is a very comfortable amount for you. Okay, so a lot to digest here, a lot of different methods and ways that you can go about starting to detach from money. Does all of this make sense to everyone? Everyone clear with the different means that we've gone through here when it comes to overcoming your attachment to money? Just yes or no in the chat for me. I want to make sure everyone's on the same page. Perfect. All right, perfect. Let me clean these up a little bit. And we're going to put these in green. You know, I'll do this at the end of today's session. Like I said, I'm always going to leave a copy of these notes inside our shared drive. I'll clean these up and I'll put them inside the drive for you guys. Let's move on to the attachment to being right. Let me get some blank space. What can we do to overcome the need of being right? Well, for most people, what I say is you have to understand your belief system, right? It starts from here. It starts from understanding What is your current belief system telling you about the need to be right, right? So what I say is, if you are someone that does not like being wrong, is this belief currently serving you in your trading? Is your current belief system currently serving you in your trading? Because one thing that I think a lot of people are not very conscious about, and again, we talked about this right up here, is this idea that you are taking more actions that are trying to make you right rather than focused on the idea of actually trying to make money. And one thing that you can start to do that will really help you with this, and it's going to sound stupidly simple, but again, it's a case of just having the right level of awareness around this idea, is actually ask yourself before you make a decision, am I doing this to be right or to make money? Because 9 times out of 10, when you have this urge to act on FOMO or revenge trade or double up your position size or to not use a stop loss, the moment you ask yourself, am I doing this to be right or am I doing this to make money? I want you to think about what is going to happen over the next 100 trades. If I decide to not use a stop loss, if I did this 100 times over, is that what's really going to make me profitable? So you have to understand, most of you, and again, we talked about this very, very early on into our sessions. I believe it was session 1 where we talked about the power of our belief system. The majority of the reason that we have bad habits is because we have a belief system that has ingrained us to think, feel, and act in a certain way, and it's not really serving us in our trading. And the way we start to counteract that is just by asking very simple questions on a day-to-day basis. Just being very, very aware of how this is going to influence what we're doing. Because again, the problem is most people are making these decisions without being conscious about what is likely to happen over a larger sample size of trades. And so I say to people, if you can start framing yourself in the right way to think about that long-term perspective in terms of where your beliefs, the direction that your beliefs are actually sending you, then you have much better odds of being able to break that pattern of behavior and actually implement the right sort of patterns to thrive in the long run, right? How else do you start to overcome your attachment to being right? One that we've talked about quite a lot throughout our time on these psychology sessions is making sure that you're doing the right level of back testing. Now, again, back testing is not the be all and end all, but it certainly will give you an exposure to how your edge plays out over time. The more and more you are confident in your data, confident in your strategy, and confident in terms of how it's going to play out over time, the better your expectations are going to be. And the more you're going to understand one specific thing: the best loser wins, right? You're going to understand that every strategy, no matter how good, how bad, is going to encounter some losses. And the more backtesting that you've done, you're going to understand that I'm going to go through a period of drawdown. And I understand that in order to survive and come out the other end of this, I have to become a better loser. I have to accept that losses are a part of the game. And actually, when I go through my back testing and I see that if I am just consistent with my plan over X period of time, it makes money. All it requires me to do is just to accept the short-term outcomes that go against me. And I have to understand that these are a cost of doing business. They're a cost of essentially being involved in a game of uncertainty in order to make a living, right? So I always encourage, when it comes to losses, you have to think about it in a way that it's not right versus wrong, right? This is something that we've talked about before. It's how much do you make when right versus how much do you lose when wrong, right? You are all essentially risk managers. You are all essentially playing a game where it's not about just being right versus just being wrong. You win when you make a profit on a trade and when you have a small losing trade. You've lost if you've made a profit from not sticking with your plan, or if you've taken a big loss over time, right? When you're not essentially managing risk in the right way, you've done all the wrong things. That's a losing trade. It's not about just the outcome of have I made money or have I lost money. And one thing that we talked about in our last session that I'm hoping you guys have started to implement is this idea of labeling your trades the right way. Most people use wins and losses. I think a great way to start reframing this idea of wanting to be right can be done through labeling them revenue and expenses, right? Taking you from one belief system to another, having you look at your trading through a perspective of running a business, right? This is going to be the best way in order to understand that as a business owner, I have money that comes in, I have money that has to go out in order to run my business. And as long as I manage that money correctly, that's how I'm going to be profitable in the long run. Okay. So I'm hoping these are very, very clear for you guys in order to help you to detach from the idea of wanting to be right. Enough exposure to the markets through your back testing, through seeing the market play out, is going to show you that losses are absolutely inevitable, right? For the vast majority of people, they just have not done enough back testing. They do not have enough exposure to be able to understand this is a natural part of the game. When you combine this level of detachment from the markets with the right expectations, like we talked about last week, all of this is going to become infinitely easier going forward, right? The last thing I want to mention today, before we move into a little bit of Q&A, is we've talked a little bit about two different areas, right? My Zoom is going absolutely nuts today. We've talked a little bit about, I'm never going to get this right, the attachment to money and the attachment to being right. Now, for some of you, you're either going to have the attachment to money. Some of you are going to have the attachment to being right. The question is, and the most important thing you could ask yourself is, which one am I currently experiencing? And for some of you, you might not know which one you're more attached to. You might feel like I relate and resonate to both of these things. And so what I say to most people, the best way to figure this out, you have to remember that we have money and we have outcomes, right? What I say to most people is the best way to figure out which one is proving to be a bigger hindrance in your trading is spend 1 to 2 weeks demo trading, right? If you have an attachment to money, demo trading, your problems will disappear. Right? If you have an attachment to money, when you go through those 1 to 2 weeks of demo trading, your problems will inherently disappear. If you have an attachment to being right, your issues will still exist. Because all you're essentially doing in the process of demo trading is removing the money that's involved, right? You're eliminating the idea of money being an part of the equation that stands in the way of profitability. So if you demo trade and all of your bad habits disappear, then what I want you to do is focus on the fixes on this side of the board, right? Start with mindfulness, start thinking about your personal risk tolerance, implement the scoring system, reduce your position size, raise your level of income outside of the markets, and consider that overall approach to your risk management. If you start trading demo and your problems still exist, then it's likely you have an attachment to being right. In which case, I want you to start understanding your belief system, where those beliefs came from. Are they actually serving you in the markets? And start asking that all important question before you take any actions. Am I doing this to be right, or am I doing this to make money? That starts to challenge the belief system that you have and gets you to focus on doing the right things that should be aligned with your data. And again, your data all stems from your back testing, your data collection. The more and more you get comfortable with seeing your strategy play out over time, the more you're going to understand this is how the market works. This is what I need to accept. This is how my strategy is going to play out over time. It all frames the right expectations and it puts you in a place where you can start to detach from the markets because you have the right expectations over time. Reminding yourself again, it's not about right versus wrong. It's that risk manager mentality. It's about revenue and expenses. It's money in versus money out and being profitable at the end of the day. So the best thing you could do off the back of this is not just start to apply fixes, all of them at once, or picking one or the other. Apply the right fixes for the right problems. Is everyone clear on this, right? If you currently have bad habits, start by demo trading for a couple of weeks and testing out whether those bad habits still exist. If they do exist, if the habits disappear, apply the fixes to the left. If the habits don't and they're still there, start going through the fixes to the right. Okay? I hope that was clear for absolutely everyone. That kind of wraps up the bulk of our session today. Before we wind down for the day, are there any questions based on anything that we've discussed today? Are there any specific psychology related issues that you guys want to address on today's call in and of itself? If you want to get involved in the Zoom chat, if you want to unmute your mic, yeah, Demetrius, feel free, man. Unmute yourself.
Yeah, thanks for this session, man.
Pleasure, man.
Well, I don't know why, but I think I'm kind of sure about that. If I had the capital to trade, I would make more money than just trading challenges. So what I mean by that? If for example, I'm in a trade, I know if I had, let's say, a 100K account, a live one, I would be comfortable with taking partials at 1R or 2R. But because I know I have to take the account to 8% every time to win the challenge, it takes so much more time. And I don't make the decision to make money. I want the decision to be right so I can get the full RR, so I can take the account to 8%.
Because you want to get to the profit target as quickly as possible, right?
Yep.
Okay.
I mean, at least, yeah, I want to be quickly, but I'm okay with not being quickly. But still, if I had the real money on my hands, I would be really okay with. I know if it takes that swing low, I know it could reverse. So I'm gonna take at least half of positions out, half of the position out. But
Yeah.
because I know I don't make any money by doing that, I hold my hands together and pray that it takes the swing low and still goes lower, because I want
And
to get to the full RR, so I make the profit faster to go to the next step.
And so the approach that you currently have, where you kind of hope and pray that it does what you expect so that you maximize the full RR, is that costing you money or is it making you more money in the short to a medium term?
Uh, I actually don't know if, let's say, I make 0.5 R on every trade that, let's say, takes a swing low and then it goes back to B. I don't know if all those positions together would add to, let's say, 8%.
So this is part of the inherent problem, right? So what you're describing here is essentially you feel comfortable in the idea that if you had a certain level of capital already under management, you would be able to follow your process to a T, no questions asked. But because you know that you're fighting a profit target that you're trying to get through, you have a change in your approach and you're not really sure about whether that approach is the most effective. Is that right to say? Is that fair?
Yeah, but I'm talking about some other peoples that are doing the same thing. They say I'm aggressive on the when I'm doing a challenge. If it takes me more than 1 to 2 months, then I'm done with it. I mean, I'm gonna risk more or do something because my mental capital is not worth the fee to pay one more. Or
So here's a question for you. If firstly, what I would say is take other people's advice, and this is including my own, this is including anybody else online. Take everybody's advice with a pinch of salt, right? The thing that I would say for you is as long as you can put yourself in a position where you have data that proves your approach is going to work in the long run, then you are better off doing what you're doing. So I'm saying this because I've spoken to traders that will purposefully be more aggressive or have a slightly different approach in the challenge phases as they would on funded. The problem that you need to be aware of is you need to understand the long-term implications of what you're doing. And what I mean by that is for a lot of people, it's very hard to separate a different approach in a challenge and then doing something completely different when they go funded. Because if you've seen a certain level of success happen from one approach, the moment that your other approach doesn't work as expected, your mind is going to direct you to maybe a more aggressive approach, which is maybe not what you want when you've gone live. And so, what I would say is, you want to make sure that you have data that proves to you in both instances, whether you're being aggressive or whether you're being a little bit more conservative and taking partials, you want to be making sure you're following an approach that is essentially giving you the best return on investment over time. And that means having data, right? Going through back testing and having the data, the statistics, the numbers that show you, even if I'm aggressive here, or even if I'm not, if I'm aggressive, it just means that I might fail two, three, four, 5 times more challenges, but I have the money to support it. And it means that I'm not going to be wasting my mental capital and I'm actually going to make it through the challenge phases quicker than most other people. Does that make sense?
yeah, yeah, I get it.
So
Yeah,
the thing is, my advice is always different for people depending on where they are financially in this game, right? If you're sitting here telling me that I've only really got enough capital to do 2 or 3 challenges before in the next 6 months, and I need one of them to work out, then I'm going to say that maybe we need to be focused on managing the psychology aspect of what's going on mentally and having a slower and more conservative approach in your trading to give you the best odds of getting funded. If you're saying I have enough financials behind me to do another 10, 20 challenges over the next 6 months, and I just want to get through that process as quick as possible, and I've accepted the fact that being more aggressive means that I might blow a few challenges along the way, but it's better for me in the short term, then I think go with that approach, right? It's got to be what works best for you. You have to remember that the right approach for somebody else is not necessarily going to be the right thing for you. It's got to be a blend of what works best for you as a person, as well as you got to have the data to prove it.
yeah, I got it. But the main dilemma in my mind is I know if this were my money and I
Mhm.
know I would make 1R at that swing low, I know I
Yeah.
would take some partials because I know myself. But because I know those money are zero right now, it's just uh, I just won't take it. It's not enough. The mental capital, the work that I've done to look at the charts every day and week to for just 1 hour, and I know then I will have to wait, let's say maybe for next week or not even next week, but 2 weeks away for the next A plus setup. Is just messing with my brain.
Let me ask you a question, Demetrius. Have you ever been funded before?
Nope.
What do you think is holding you back from being funded?
My psychology, not the. I'm kind of sure it's not the strategy.
And what specifically about your psychology?
I'm gonna tell you about my week in trading.
Okay.
So I just bought a new challenge.
Okay.
I opened my my trading week, I think on Tuesday. Yeah, on a Tuesday. Um, and it was a stop loss.
Okay.
It was actually it was a good trade, but the stop loss placement was really bad, and David commented about it in the live stream.
Okay.
So the trade was good, but the stop loss was bad. So I went minus 1 hour. The
Okay.
next day, I entered in two trades. Both of them are wins. One really good. The
Mm-hmm.
other one, it went in the drawdown. It stayed in drawdown a lot of time, but went to TP.
Mm-hmm.
Okay, so I was really hyped. I was 2.5 R on the account.
Okay.
And then the next day came, and I saw a setup that I thought about it on the night before. It did exactly what I wanted. I would say it was my A plus setup, and it just didn't go my way, and
Okay.
I get the stop loss, and then I entered in a second trade, which I didn't thought about it. I mean I didn't have my bias. I just look at the chart, oh, and then it has to do that, and I reacted. So that was bad. I got minus 1 hour,
Mm-hmm.
and in the same day, another trade. It was I would say it was one of the better setups, but just the wrong bias. So
Okay.
I just stick to my strategy, and now I'm down on the account minus 1.3 R. So over trading, I don't know.
So I want you to do a specific exercise this week, and we're going to discuss this. If you're live on next week's session as well, or we
I
can
will.
discuss this inside the Discord, right? I want you to do a specific exercise for me.
Yeah.
This is going to be completely unrelated to your strategy. I don't care how you trade. I don't care where you should take partials. I don't care what's a good or a bad setup for you. I want you to think about one specific question, right? I want you to figure out, and I want you to be able to answer very, very clearly, why do you want to be a trader? Right? Why do you want to be a trader? Now, before I don't want you to give an answer on today's session. I want you
Okay.
to go away and think about this, because the immediate thing that most people do is they think about, I want to make more money, or I want more freedom, right? I want to be able to, quit my shitty day job. I want to be able to do this full time. I want to be able to travel, whatever it may be. I encourage most people to get very, very clear on what because I presume, and again, you could just tell me yes or no. I can presume money and freedom is something that you want from trading, correct?
Yeah, freedom more than money.
Freedom more than money. Cool. So, what I would say is over the next week or so, I want you to think about specifically what you would do with that freedom. Because a lot of people, and maybe you're different, but a lot of people really haven't given it the level of thought that they need to answer this question for themselves. When you say that you want freedom, what specifically do you want freedom from? And again, I don't want an answer in this session. I want you to think about this over the week. It might be freedom enough to say that I don't have to do as many hours at this job as I want to. It could be freedom to say that I want to be able to visit this specific country for this amount of time and be able to do X, Y, and Z experiences while I'm out there. It might be to say that I want to be able to retire my parents, or I want to be able to buy my brother a new car, or whatever it may be, right? It could be one of a million different things with that level of freedom that it can give you. But I want you to be very, very specific. And I would encourage, the more you could make that level of freedom about, I would say, either meaningful experiences or including other people, friends, family, partners, brothers, sisters, whatever it be, loved ones, the more significant and meaningful that you can make it, the better. Because the problem is, right now, your everything that you describe in how you approach the markets is very much graded around the type of setup or whether the trade won or lost money. And what I want you to start focusing on is more about the process behind what you've done. So, for example, I'm going to use something that you mentioned there, which is you mentioned that the first trade you took during the week was a good setup, but your stop loss was in a bad position. I would consider that if you haven't done so well with one of the four things that you could manage, then actually the trade wasn't as good as you thought. If the setup is right, but you haven't controlled your entry, your management, your exit, or the risk element of the trade, then actually that's a bad process when it comes to, like we discussed today, scoring the process, right? I want you to get your mind focused more on the process side of things. And I want you to get focused more on why you're doing this. Because in those moments when the temptation is there to overtrade or to rush the process or to not stick with your plan or to double up on your position or whatever it may be, I want you to remember that you're doing this not just for you, but maybe for others, or you're doing this for certain experiences that you are wanting to achieve that maybe your parents, brothers, sisters, guardians, whatever it was, they never got to achieve. And that's going to be deep and meaningful for you. When you've got a why as to why you want to be a trader that's as deep and meaningful as that, staying away from the shitty bad habits that most people possess becomes a little bit easier because you're not just chasing money anymore. You're chasing something deeper than that. And you know that in order to achieve that level or objective that you're working towards, it requires doing something differently than the majority of people do. Does that make sense?
Yeah, man. Totally.
So again,
Uh,
it might be something that you're already thinking about. It might be something that you already have an answer to, but I want you to just give it some thought over the next week. And we'll pick this up, like I said, either in next week's session or you can shoot me a DM. We'll discuss it
yeah.
on Discord, whatever it
And
is. Go on.
yeah, I'm already thinking about what are you saying, and sometimes I don't know if it's correct, and it's just sometimes I'm really hard on myself because I know I'm doing shitty stuff because I know I'm doing for the other people. I'm doing this also for other people's in my life,
Yeah.
and I'm really tough on myself, and it takes me, I don't know, an unhealthy amount of time to get past a trade just because of what you said earlier. I know it's such a big deal. This is my job right now. This is I have to do and I can do it right. And
Mm.
I'm punching myself, not physically, but emotionally.
I this might be a personal question, Demetrius. I hope you don't mind me
No
asking.
problem.
Do you have a job or income? Because you mentioned this is your job right now. Did you mean that are you working outside of trading at the moment?
Yeah, so I have enough income.
Okay.
My job is it doesn't take a lot of time. I mean,
Okay.
2 hours a day or something like that.
Yeah.
And I also I have passive income from something I done.
Okay.
Yeah, so and I'm set up for with this income for more than I will be in 2026, in the middle of 2026. That's
Okay.
when my this expires.
Okay.
So I'm
Cool.
okay with, I'm not living a lavish lifestyle or anything. It's just living.
Yeah. Yeah, yeah. Okay, understood. Understood.
Yeah.
Let's start with what we mentioned initially, right? I want you to develop that why. Once you've got that and you've got a little bit of clarity around that, like I said, we can discuss this off air if it's a little bit personal to you, whatever it is.
Mm.
And we'll pick this up from there. I want you to just sit on this idea for a week, and I understand that you've described you have this level of being hard on yourself. What I want you to recognize is I want you to go back to something we've discussed over the last few weeks, right? Your mind is constantly moving you away from pain and it's moving you toward a reward process. If you're finding that you're still caught in a cycle of doing shitty things which you know are not going to give you what you want, what we need to do is make those shitty things more painful because you would not purposefully keep doing things if it caused enough pain. Because, like I said, the example I always used, if I asked you to go outside blindfolded and walk around in the road, there's not many times you're going to need to do that before you learn your lesson. Most people won't even do it the first time and they've never been hit by a car before, right? When you know psychologically and you've truly accepted deep down that this is going to cause me a certain level of pain that I am not willing to bear, you will completely change the way you do things. And so what we need is a strong why, and then we need to make your current actions painful enough that it understands it's taking you further and further away from that why, that you do not want to do these same things all over again. Make sense?
Yeah.
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 So work on this. We'll pick this up again, let's say in about a week or so. But like I said, if you come up with something during the week, shoot me a DM or something on Discord and we'll have a little chat about it.
Okay. Thanks a lot, man.
Yeah. All right. Appreciate it, man.
Thanks.
We had one more question from Mehul that said, can we also meditate before sleep or is it just in the morning? My personal preference is to usually meditate first thing in the morning. Um, you can do it before sleep as well. I wouldn't say there's a right or a wrong time. The thing that I would encourage most is to do it at a time that makes you most consistent. So if you're going to be most consistent before bed, do it before bed. If you're going to be most consistent first thing in the morning, do it first thing in the morning. There's no right or wrong time. Just stick with the approach that gives you the best consistency in terms of your specific lifestyle. Hirach, feel free, unmute yourself, my friend.
Can you hear me?
Yes, loud and clear.
So thank you for the session, bro. Like all the other sessions previously were very helpful. Like the first session that it was about the mind, so that mind always seeks protection from pain.
Mm,
Like it was like very eye-opening for me. Like I never
appreciate that,
thought
man.
about it. So about the meditation part that you said, I'm just well, I've tried I tried a couple of times to meditate, not for the
Hmm.
trading, for my
Yeah,
like personal life and so on. So I'm just trying to make sure like there is a similarity between meditation and trading. Like for example, when you enter your position and when your trade goes into the price goes into your stop loss. And during that time, like I associate that moment with meditating when you're focused on your breathing and some thoughts came in and came out. And in that moment, you start to focus on your breath again. So can I apply that into my trading when I'm into the position?
for sure. For sure. And again, this is one of the benefits that people will get from meditation when they go through the practice. Now, obviously, you mentioned you've tried it already before. But yeah, 100%. I find that the focus on the breath is very powerful for a lot of people because it brings them back to the present moment, right? What most people end up getting stuck with is when they will use the example that you mentioned there, when they hit a stop loss, they either get so consumed with thinking about the future or so lost with being haunted by the past that they forget to act on what is best for them in this very moment. So I find meditation is powerful in terms of bringing you back to the present, exactly the way you described. You can use that in your current environment, in your current practice when you deal with a loss. If it brings you back to the present moment and makes you live here in the now moment, then it's going to be beneficial for you. So yes, for sure. If you find that would be helpful for you, then yeah, 100%. I'm aligned with that.
Thank you, brother. I appreciate everything.
Pleasure, man. Thank you so much.
And by the way,
Any
also everything helped me like for psychological aspect. Like I never thought David will. At first, when I bought the boot camp, when I paid the
Yeah,
money, I didn't know that there is going to be also psychological lessons. Like to
I
be honest,
appreciate
I
that,
knew
man.
everything about the technical parts, but there are thoughts that, with the help of David, I connected. The
Hmm.
psychological part that the first session when you mentioned about the that mind always seeks protection and pain avoidance, like it was like crucial for me. Thank you very much,
I
bro.
I
Appreciate
appreciate that, man. Thank you so much. I'm humbled to hear that I've had a positive impact, man.
it.
Okay, any other questions before we wrap up today, guys? As always, the Discord is, if somebody's watching this back on a recording, the Discord is always open. If you guys have a question, please feel free to shoot them in there. Otherwise, I will leave you guys to enjoy the rest of your evenings and the rest of your weekends. Hiroch, the exercise was on the whiteboard that I shared, so I will upload it with the recording. Essentially, it's to test your strategy on a demo account for 1 to 2 weeks and to see if your bad habits that you're currently suffering with disappear. If they do, apply the fixes from detaching from money. And if they don't, apply the fixes from helping you to break free from the idea of being wrong. So that would be your exercise. Taking the next 1 week or so, demo trade, see which one you have more attachment to, and then start working on applying the right sort of fixes in there. Okay, if all is good from your guys' end, we will leave it there. I hope you guys have enjoyed today's session, and I look forward to catching you again next week. Take care, guys. Have a good one.